Well, good morning. That's me. I just realized that I don't have the thing up and going, but let me know if you would. Let me know that you can hear me loud and clear. Hello, Brenda. How we doing? Afternoon? Oh, you must be on the East Coast. It's still morning time. It's only 9 o'clock. Good morning, Jennifer. Good. Let me get this. The view's a little different. Changes some things up a little bit. See the side of my face, this fake goatee I have. I was watching Seinfeld, the one with where they had the fake mustache. This is my attempt. This is a sad thing. My brother could grow a full beard in like a week, and this is like 3 weeks for me. So anyway, hope everybody's doing well. Glad you can all hear me. Yeah, so you're on the East Coast. Awesome. So yeah, I'm changing some things up. I've learned something over the last couple of days with Omega charts that is awesome, actually, which has got me thinking of shifting things around a little bit. So we shall see. Ohio, the South. I won't even go into that. There's a totally different joke I just came up with last week. Not come up with, but it just came out last week. So welcome out to Trading Coaches Playbook. Yeah, I know the Midwest. I don't want to go into the story. It's fun. I think it's funny, but so let's get a disclaimer out of the way. I am not a registered broker dealer or investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So just a quick review of everything coming up. Shortly, Mastering Trade coming up all on the 9th. Trading You is the 10th. Patterns in a Flash. If you haven't been in there, you should get it. I'm a little bit biased, though. That is on the 14th at 8 p.m. Should probably make sure that's actually on my calendar. Thank you, Miguel. There is a, as you know, pretty much everything that we do, you get a trial with. So you can go in there for 2 weeks and kick the tires if you'd like. And see if it's a tool that is beneficial to you. I have little doubt that it will be. Even if you've been trading for a time, you want to step up your technical analysis skills and get significantly better, then that will definitely help you. So, and the beauty is you get a 2-week trial. And today is the 4th, which means in 10 days, I'll be doing a 1-hour session that is exclusive for subscribers. So if you go take the trial right now, then in 10 days, you can join me there for an hour of free if you want. If you decide not to keep it, then no big deal. But that gives you a shot to come in and see how I trade. And you'll see quite a bit of that today. So actually, we're going to cover a specific pattern in the first little bit. We'll go through the PowerPoint a little bit, and we'll rehash that some, and then we'll go look at charts. So if you have tickers you're watching, if you have stocks that you're trading or you want to trade, then get ready. You can start putting them in the chat if you want right now. Trading You is also November 16th. And then Monster Market Movers on the 17th. Of course, mastermind groups Tuesday 8 to 9. And then the free workshops, you got Power Hour with Rob, Trading Coaches Playbook, this one every Friday. And then How Not to Get Your Kicked is November 7th and November 9th. So, and then of course you got Power Option Plays Tuesday and Saturday, Cover Call Explore Thursdays, and then E-Mini Think Tank with Brandon Monday, Wednesday, and Thursday. So that's a shocker, Brenda. I already knew that was coming. Apple just triggered for me. It's getting destroyed still. I'm wishing I would have pulled the trigger on quite a few things, but yeah, things are collapsing as we speak. And I don't mean like just falling, like collapsing. Like the Dow was up. I'm sorry, for those who don't know this. So the machine I'm on right here that you're watching me on is basically my work machine. I do email and business and all the other stuff on here. The one behind me that I'm staring at is my trading machine. Right now it's fully dedicated to that. I'm looking at shifting gears, but the Dow was up over 500 an hour ago. And now it's off 47. And the NASDAQ was up like 150 or something. It's down 60. So we're talking a free fall right now. This is when I don't really panic, but it's like, I wish I was in right now. I wish I had reloaded up on my puts. I haven't yet, but it's okay. I'm learning to be patient and just wait, because it'll most likely bounce at some point. The question is how far and how fast, and then when do you get in? So, but as you can see on the screen, you can catch us on all the different social media platforms. And then there is the Patterns of Flash, just another shameless plug. So, but we're going to cover this. And if you've been through Patterns of Flash already, then you should be very familiar with the double bottom. And if you're not familiar with the double bottom, then you just saw one happen in the last 2-3 weeks. And that was part of the reason I decided to be a good time to cover this again, just to rehash it in case you haven't seen it, or if you haven't had Patterns of Flash for a while. Nice little refresh is never a bad thing, right? So essentially you have a stock or index, whatever it is, moving lower, right? And volume is increasing as it's trending lower. And then the volume a lot of times will start to decelerate, right? When you get lower and lower volume, that means whichever direction it's moving is getting weaker, right? If you're going up, if things are moving higher and you're getting weaker volume, that's an indication of weakness, right? That means there's not more bulls coming to the party. There's more people leaving the party than there are coming in, right? They're going out the back door while there's not as many people coming in the front door. If you're bearish, if you're moving down and the volume is getting lighter, that is a bullish sign, right? Because there's less and less people leaving the party. So you got to keep that in mind and look at volume. That's the other thing that's important. So volume is moving high as it's going down, and then you get volume getting lighter as the pattern starts to develop. And then you get a W, right? The double bottom. But let me ask you this. Do we have a double bottom right now? On the screen, if you're looking at that screen right now, is there a double bottom? Scratch your head, right? Like, yes and no. Kind of a trick question. So the double bottom has formed, but it has not confirmed yet. In order for it to confirm, there's two things that happen, right? The first thing is, if you have a downtrend line like you have there, if it breaks above that downtrend line, that's the first warning sign. That's the first one that says, okay, we've got a double bottom that has formed. And if it breaks the trend line, if it has one and it breaks it, then the bearish move may be over, but not yet. The only way we know when it's actually confirmed is if it breaks the midpoint. So this point right here is the middle, right? It's called the midpoint, the middle of the W, if you will. If it doesn't break above there, there's no double bottom. It's formed. It looks like a double bottom, but it's not confirmed yet. Just like a head and shoulders, right? Until the head and shoulders breaks the neckline, it's just a pattern that's formed. There's no confirmation yet. And that is critically important, because as I don't know if y'all saw Starbucks, it was a pattern of the week last week in Patterns of Flash. So if you have Patterns of Flash, I do a pattern a week, one pattern a week. Actually, I usually do two. I try to find one bullish, one bearish. But last week I talked about Starbucks. It was a head and shoulders. And I said, do not enter the trade until it definitively breaks the neckline. And today it gapped up like 8 or 9 points because of earnings. When you have earnings, you never know what's coming. So no matter what the pattern is with earnings, you don't want to get into it if patterns or if earnings is still sitting there. So sorry, I forgot to turn my phone off. So on a double bottom, once it breaks that midpoint, now we have confirmation. And then ultimately, the ultimate goal is to have it pull back. Sometimes it just takes off and runs. That's part of the reason that I scale into trades like I do. Because, well, I'll show you in a minute. What happens often is it'll break out and then it'll pull back and tap the line and take off. And I got to stop thinking about Oracle. Some of you know, right? Anybody here remember the Oracle situation a couple of weeks ago? I'll show you real quick. It's good and it's bad, right? Like most things in trading, right? You have bullish and bearish signals. You have both. And we'll see that. And that was part of the reason for this, because I think it was maybe it was this Tuesday. It was last Tuesday. We were talking about the double bottom with some other people. And somebody said, well, there's no double bottom because it's below there. But on the intraday basis, it's not. But on a closing basis, there was. So a lot of times it's just a balancing act of bullish or bearish. There's signs from both sides, right? The bulls and the bears are like this. You got to figure out who's got the stronger argument, right? But when it comes to entering the trades, okay, the question is, where do you get in? And the very, very aggressive place, there's two different ones on a double bottom, right? The very aggressive place would be as it's barely moving up from the second bottom, because there's barely the pattern formed. If you're looking at right here and you've got a bottom and then it hits here and starts to bounce up, it's barely even forming, right? It's not even close to confirmation. So this is a super aggressive place to enter. If it has a downtrend line, which sometimes they do, sometimes they don't, but if it has a nice solid downtrend line like this and it breaks above there, that's a more conservative place to enter, but it's still aggressive because there's no confirmation the double bottom has actually, there's no confirmation, right? It hasn't confirmed. Sound like a bumbling idiot. Hey, I could be VP. Whoops. I'm going to run out of water. A less aggressive place to get in is as it breaks the midpoint, right? As it's breaking that, because sometimes you get a break of it and it goes up just a little bit and then it falls back down and we get a false breakout. So it's still an aggressive place to enter if you enter just as it breaks out. The more conservative place, the most conservative place to enter is if it pulls back and it bounces on this line. After it bounces, you put a hook right here and say, okay, if it bounces off this line, then I'll get in. So that is the conservative place to enter. So depending on how you trade, whether your trading style is super aggressive or really conservative, then you got to pick your entry point. I land somewhere in the middle there. I know many of you have heard me say this. I trade very aggressive, but also very conservatively, which seems confusing. So here's basically the way I trade. Down here, sometimes, and not always, but sometimes if I notice this, if I see the pattern early enough, I'll look at it and say, okay, I'm going to pick up just a small position. 1, 2 contracts, 100, 200 shares, whatever, whether you're trading stocks or options, doesn't matter. Pick up a really small position here. Because typically what you're going to do is place the stop right down below the double bottom, right? Well, if you get in right here, there's not a whole lot of room to the stop, depending on what stock you're talking about. Okay, if you're talking Tesla, it could be 5 or 10 points. If you're talking Alcoa, it could be 50 cents. But if you wait till you get in here and your stop's way back, actually your stop would be right here. But if you get in here at the very aggressive place with just a little position and it stops you out, it doesn't cost you that much, right? So it's like dipping your toe in the water. And that's what I love to do, dip my toe in the water. So I'll pick up maybe a little bit here. If it takes off and runs, maybe I'll add to it right here. Maybe I'll add to it a little bit more here. And then if it runs up like this, I'd probably take some profit. If I did get in here, here, and here, now I've got a decent sized position. I've got some profit on it. I'm going to take some profit out here if it pops up. And then if it does pull back, I can reload it. And if it does pop back up and even more, I can reload even more because I've already banked some profit, right? That makes sense. So I get in at the aggressive place, but I do it with a really small position. So it's a conservative position size at the aggressive entry place. That makes sense? Any questions on any of that? That's really all there is to cover with the double bottom. There's not, it's pretty, most patterns are very simple. All right. If there are any questions that pop into your head, then let me know. But we're going to go spend the next 45 minutes or so playing with charts. Oh, I just discovered this in the last couple of days with Omega charts. And I knew that this whole thing was there, but I didn't realize how awesome it would be for me. Because I'm not very good at bookkeeping or record keeping. I can't stand doing any of it. And I just realized there's a practice trading system inside Omega charts. And I also just realized that I don't know, maybe Miguel knows. If you know Miguel, let me know. I know I've got streaming on this, but I don't know if people just have a regular subscription to Omega charts, do they have streaming automatically, or is that an add-on? I'm not sure if it is or not. And it is streaming. And here's the thing that I realized, it's streaming, but it's a 15-minute delay in streaming. So you can see at the very top here, the time shows 8:59, even though it's 9:15. So, okay, thanks, Miguel. He's not sure either. I don't know if that's part of Omega charts where you just get streaming automatically, or if you have to subscribe to that. Because usually real-time or streaming data is typically, there's a fee to it. I mean, they have to pay exchanges, right? There's exchange fees. That's why some of you are like, well, I don't pay for this. Well, the exchange is charged for the data. So, okay, Brenda knows. Brenda, it is an additional subscription to get the streaming data. Okay. So I didn't even know I had it on my subscription, but I did. So now I have it. But the beautiful part is, for me, is that I can do all these practice trades up here which I have quite a few orders sitting out there, and several have hit. Apple triggered a little bit ago. And the only one I'm getting beat up on is the PLD, which is the long position. Everything else is short, which is beautiful because overall I'm still up a little bit. But the beautiful part for me is that I just realized that, like, for the pattern of the week, I have to go manually log all that stuff, which is a nightmare. Having to write it all down or put in an Excel spreadsheet. Data entry is not my favorite thing. It's right up there with painting inside and right along with planting trees, which my father's a forester. So I grew up planting a lot of trees. And the last time was 25 years ago. It was my brother and me, and he had 1,000 trees to plant over 2 acres, and it was flat and really, it was all overgrown. So, which is a nightmare. We spent 12 hours. It's like chopping wood. You know, you're swinging this big old heavy, it's not an axe. I can't remember what the name is, but it's excruciatingly physical work. And my brother and I both just wiped out. So, anyway, keeping records is right up there with that. So the beauty that I discovered is that I could do it all in here, and this will keep it all. It'll keep all the data for me. So I can place all my practice trades, all the patterns of the week. I just started a pattern of the week account. So now I can have this track it for me so that at the end of the year and or whatever period it is, I can go back and say, here's the results. So I was super excited. I'm still excited about it. It's only been a couple of days. So I'm like, this is awesome. And I also discovered inside here, you can create different lines because you can see, those of you that know how I trade, right? I've got the stop, the target, and the entry. And the stop is red, the entry is, or the target is green, and the entry is orange. And I set up these different lines. So now I can hit number 2, and that one's red, number 3. Instead of having to go manually color code them all, super easy. If you want to know more about that, let me know. If you do different lines with different stuff, you can create different defaults on each of them. That's the beauty of it. But, all right, the Qs. Let's look at the Qs, see what it's doing right now. Okay, there, it just updated. So this is going to be, you can see the number moving on the right-hand side of the chart, but just remember that is a little delayed. So yeah, if you need me to show a little, I can show you a little bit more too, Jennifer. So it is nice. It's especially for me and the way that I chart, because I have these, you know, the trend line that extends. And then if you want to draw, I have trend line number 2. So here's trend line on the right side, right? These are all your drawing tools. Trend line number 2 does it without the extensions, because I do that sometimes drawing a pattern. So anyway, let me know if there's more you want to see that, let me know. But yeah, the NASDAQ has been stuck in this little channel. The Dow busted out big time. In fact, let's do that. That's what I was planning on doing, is going to look at those, the overall markets. So here's the double bottom. And this is what we were talking about the other day. This is what made me think that it would be good to talk about, because we looked at this and it doesn't look like a double bottom, right? But if you go to line charts, we do have a double bottom. And then the midpoint is right here at about 3,800. And here's the beauty, can be the beauty, okay? It's turning out right now, especially, that it's not that beautiful. We have essentially a false breakout. But, and this is the SPX, we'll look at the NASDAQ too, but what we had is, not only did we have the double bottom form on a closing basis, on an intraday basis, we made a new low. But closing, we closed way up here, creating the double bottom. But what also happened is you've got a bullish engulfing pattern that not only has lots of volume, but it also engulfed 3 previous days. And for those of you that have been through patterns on Flash, you know, on an engulfing pattern, not only do you want big volume, but the more days that you engulf, the more powerful the pattern, the more significant it is. So that bullish engulfing pattern that also formed a double bottom was a very, very big signal. That was the day, that morning actually, is when I cleared out of almost all my puts with the exception of 2 or 3 positions. And I'm glad I did. I mean, it was kind of dumb luck. Realistically, I would have closed out later that day, but I just got out in the morning. I went, yeah, I don't know. Just something in my gut said to get out. So I did. Whew. I still got beat up on some other ones, so it wasn't that spectacular, but I didn't give back as much as I would have had I stayed in. So, but then what happened is, what's this, the 24th, this day here, it basically kind of challenged the midpoint. So here's the midpoint of the double bottom. There's the challenge of it. The next day it gaps above it. And now we have a full break of the midpoint. So now we have a bullish signal. Now we have confirmation of the pattern. So if you're a very aggressive trader, then you maybe would have gotten in somewhere on one of these 2 days, maybe just a little position. And I'm not sure how significant this downtrend is. I mean, I don't know if you can't really draw much there. Yeah, I'm not going to mess with it. But you may have added to it a little bit here, maybe on this day or this day. And then you would add to it here on this day. And the more conservative entry would be if it bounces. And it did kind of bounce here a little bit. If we go to a line chart, you can see it broke out and then bounced here and rallied for one whole day. But then we dropped off. And this day right here is the Fed day. This is Tuesday, right? So this is what happened with the Fed. It rallied in the morning. And then when he announced, it popped up real quick. Or when the rate increase was, the market loved it for the first 5 minutes. And then it dropped off and then it rallied back up and tried to make it again. And then it just tanked. After Powell started speaking, the market just bled, which is what's been happening the last several times, right? They get excited for a couple of minutes and then they go, oh, wait a minute. It's not good. Let's get the heck out of Dodge. So this is kind of a tricky one where we had a confirmation of the breakout, or we had a confirmation of the double bottom. We had a pullback, and a conservative entry would have been on this day, but you'd be getting stopped out now because we fell back through it. This is where it's good to trade smaller when your overall view is not really that bullish. And when you have announcements like the Fed coming out, because this would not be, knowing that the Fed's coming out just 3 days later, it would not be wise to take a large position here. So a lot of times when I know there's big announcements, something like that coming, if I take a position, if you were going to get bullish in any one of these places in this rally, knowing that the Fed's coming out, it would be wise to take a smaller position than normal, right? So I always adjust the size, the amount of risk I take to what's happening, looking at the big picture, the small picture, everything, right? You got to analyze everything and figure it out. So there's a double bottom that we are literally right now, as we speak, failing. Here's the Russell, which is not. And you notice this on an intraday basis, the Russell did not, it broke below just barely. But we have a nice clean double bottom, huge bullish engulfing pattern, lots of volume. We engulfed 3 full days, almost 4. So that was really strong. It breaks out. It makes a big break of the midpoint, right? Because here's the midpoint, and it doesn't even slow down. It just takes off, which is another reason, okay? Have you ever had this and you go, okay, I'm going to wait for it to pull back. And it doesn't pull back and it just keeps running. And you're like, and you're kicking yourself. I should have gotten in. Shoulda, woulda, shoulda, coulda, right? Well, this is where, like, I'll stick my toe in the water and trade just a small position. Because more often, well, I don't know what the actual data is. I don't know if there is any data on how often stocks pull back. And it'd be really, really hard to quantify that to be able to actually get real data. But how often it pulls back, it's fairly common, okay? So if you get in here and it pulls back right away, then you're a little bit underwater. So you got to be willing to take that risk. But if you get in with a small position and it does take off, then you're good, right? Same thing here. It would have paid off by getting in even just a small position. Of course, then the Fed comes out and this thing got absolutely trashed. But now the Russell is actually still bullish unless it breaks back below that 1775. So we've got the double bottom. This one's got a right cheek up, even though on an intraday basis it didn't. But on a closing basis, we've got a right cheek up. We broke the midpoint. And as long as we stay above that, the Russell would technically still be bullish. I don't think it's going to stay up there, but we shall see. Hard to say. Where's that right this second? It's only down 1777. Oh, so it's down. Yeah, it's actually down. It's challenging that 1775 right now. That's how quick it's moved in 15 minutes. It was, well, it's showing here 18. It's dropped off 25 points. The Dow is a whole different story, right? Similar to the Russell, we had that double bottom. It really barely made an intraday low. And not only did it take off, but it engulfed 4 days, almost 5, and big volume. So that gave a huge catalyst to the Dow. But what you'll notice, oops, a little too tight. So here's the double bottom. Here's the midpoint. It barely broke above the midpoint, came down and tapped it and launched. So there you have it with the Dow and a massive run, right? And now it's getting trashed. It's down a bunch. That says down 48. it's actually up 48 right this second. It's dancing all over the place. And then here's where it gets interesting. And this will be for the Qs, Brenda, basically, because NASDAQ and the Qs are essentially the same. Notice the NASDAQ, though, we don't have a double bottom, even on a closing basis. There's a lower low here. And even if you wanted to call this a double bottom, which is not even a stretch, it's not even accurate. Okay. This would be the midpoint. And it failed to break. It didn't even intraday, it really didn't even make it. So this is where the tricky part is overall, because you've got the Dow's on a raging bull move, short term, right? The SPX broke out a little bit, but not that much. And now it's falling back into its little range. The Russell had broke out north and is almost back into its range. It's trying to stay above that range. And then the NASDAQ is not only stuck in the range, but it's actually challenging the lows. So you've got the four major markets that are they're very confused, okay, which is not normal. Most of the time, all the major markets, especially the NASDAQ, the Dow, and the SPX, those three major markets are typically running in tandem. It doesn't happen a lot where they diverge, especially this much, where you've got the Dow and the NASDAQ on complete opposite spectrums. Dow's on a massive rally and the NASDAQ is getting hammered. So it's not normal. The question becomes, which one is going to come out as the leader? Which one's going to lead the way? And, will the NASDAQ continue to tank and pull the Dow down with it? Or will the NASDAQ turn around and the Dow continues to rally? It's hard to say, right? We never ever know for sure. But that's what right now, and this was happening like this in kind of a dramatic way. It's not, a little bit of difference is not that big of a deal. But when you get this dramatic of a difference, it was happening about a year and a half ago. Before the major markets turned over, you had the Russell that was going sideways, and the SPX was still rallying, the Dow was still rallying, and the NASDAQ was still rallying. And then eventually they all caught up. So the question becomes, how it will resolve. And last time I expected that this big divergences between the markets to resolve to the downside. And that's what I think we're going to do again here. Don't know. We'll see. We catch up here. I'm not sure what you mean there, Jennifer. You say good to think about strategy. Smaller trades, if not overall, going the right direction. I'm not sure exactly what you mean. It sounds, I'm trying to figure it out. Sorry, I'm just like today on puts. You mean like I wanted to? Yeah, it depends on how things are going to resolve. I've been waiting until the close a lot more lately than I normally do, because I'll get in intraday. If there's a good signal and something looks like it's going to continue, or it looks like it is going to turn around intraday, but with how wild and crazy it's been, especially during earnings season, right? It's been wild and crazy, more than normal, more volatile. So you see these massive swings during the day. We'll be up 500 points on the Dow. Well, like Tuesday, right? We were up 500 points on the Dow. We closed down 500. It was up 400 and down 500 by the end of the day. 1,000-point swings are no big deal. It's just normal now. So with the craziness, I've been waiting until closer to the close, unless there's some other significant signal that says it's time to pull the trigger. Yeah, exactly, Trip. Definitely nothing normal about current economies and markets. Yeah, and it's crazy. And I just saw a thing yesterday, the day before, about Canadian real estate. And Toronto was apparently the hottest market in the world. It had the biggest bubble, is what they were saying, and now it's crashing. And seems like there's a Canadian or two in here. Maybe not. Maybe that's somewhere else. But apparently in Canada, in Toronto specifically, they were saying that the average family, their housing expense is 64% of their income, of household income. 64%. Not of one person's income, but of both. If it's a two-income home, 64% of their income goes to a mortgage. That seems pretty crazy high. If one person loses their job, you can't pay your mortgage. And so there's a lot of people predicting a massive crash in Toronto. So, yeah, a lot of places are getting weak. And I poke around on Zillow once in a while just to just to see how things are. And there's tons of, I mean, everybody is dropping their prices almost. I saw a thing a couple months ago where Boise was one of the hottest markets in the US. And I think it was in July or August. 70% of homes listed on Redfin, they had lowered their asking price in that month. They dropped their asking price in that month. So the housing market is, I don't know if I'd say it's on the verge of a collapse, but I think it's at the very beginning of a significant decline, if not a crash, because especially with interest rates continuing to go higher. I mean, they're at like 7%. They're probably going to be at 8 here in the next month or so. Most people that either were in the market or looking for a house are going to be like, you know what, I'm going to wait. I'm going to wait until it drops off. So the only people that really, I think, are going to be buying are those that were already in the process, and they're just going to suck it up and eat the higher rates. But the higher rates will force the prices to come down because people buy on what they can afford on a monthly basis, right? So if you can afford a 3,000, what was it? I think it was in May, an agent that I know well, he sent out a thing that in January, if your budget was $3,500 a month, that was your mortgage budget, you could afford an $800,000 loan at 2.5% or 3%, whatever it was. By April, your buying power is down to 650. And that's probably down to 450 to 500 right now, I'm thinking, with where the interest rates are at. So less than a year ago, you could afford an $800,000 loan. Today, you could afford a $450,000 or $500,000 loan. That's a massive, massive drop in buying power, which means the housing prices have to come down. I mean, there's no way around it. So we got 28 minutes, Brenda. You know what? I'm going to kill this and start over. Thoughts on gold. Give me just a minute, Kev. Let me. I won't say it, Brenda. I'll be nice. Yeah, exactly, Trip. China's real estate market is also in shambles. Yeah, wait for about a year or two, Brenda. If you're going to buy a house, if you're looking at buying a house, then wait for a year or two. Oh, nice, Kevin. That's awesome. Yeah, well, that depends on perspective. To say it's bad times we're living in. Yeah, it's in some ways it's bad times. In some ways it's great times. Depends on your perspective, how you look at it. And this is the beauty of being a trader, right? We can make money in any market. So no matter what the overall economy is doing, we can still make our economy grow. Even when the economy around us is crashing and tumbling and everybody's losing their shirt, a lot of people are, we can actually profit and benefit from it. So then if you make a bunch of money trading in a year or two, you can take that money and pile it into real estate if real estate crashes. And now you pick up houses on the cheap. And then in 5 or 10 or 20 years, when the market rebounds, boom, you're in great shape, right? That's the whole purpose. So, but yeah, exactly, Trip. And you know what else? This is one more thing that I add to it. I saw a thing on YouTube. It was called Airbnb Bust is the title of it. And there was an economist lady on there that she was going through a lot of data. This guy was interviewing her, going through a lot of data about Airbnb and the short-term rentals. And the number of short-term rentals in the last 2 or 3 years has exploded by like 50%. There's, according to Airbnb, they have 2.5 or 2.6 million homes, short-term rentals on there. And that's doubled in the last 2 or 3 years. And I know people that have invested in short-term rentals. You say, oh, look at all the money you're making on short-term rentals. It's more profitable than long-term rentals. Well, except that I know somebody that has one, and they said their bookings have dried up in the last 2 to 3 months, like almost completely disappeared. So you buy a house with a mortgage with the intention of collecting these short-term rental fees and making a bunch of money, because that's where the money was. Everybody started chasing the money. And all of a sudden your bookings dry up because people don't have any excess cash to go book a weekend, $1,500 trip for the weekend, because they spent the $1,500 at the grocery store and in their gas tank. So you got all these homes that they're going to have to do something with. What are they going to do? You turn it into a long-term rental if they need to cover the mortgage, or some people are going to be in a position they just have to sell them. They don't have a choice because they don't have the money to cover the mortgage. So when you get speculation like that in any market, if things change and you're over leveraged, you're in a world of hurt. I know a few people that in 2008 got over leveraged in real estate and they lost everything. It's sad, when it happens, but exactly, Jennifer. Yeah, lower home values means lower taxes. Exactly. Which is crazy because we've got a family cabin out on Vashon. It's just a little tiny. My grandpa built it in like the 50s. I'm going to draw lines on here but it was just a little wood box. It's like 400 square feet, but it's on the water. So it's an awesome little property. And it's just a little summer cabin that we go to. But they just jacked it. My mom sent a thing saying, because when my grandma passed, it was left to my mom, my brother, sister, and me. She said they just jacked the valuation on it $86,000. It's a little tiny 400 square foot cabin that sits on stilts. I mean, most of the value is in the land, but it's still crazy. Like, how are they justifying that? The county's just looking to get extra tax money. So now my tax bill is going to go up because we split it. But so there's where we're at with the Qs, Brenda. I know time's passing. I'm getting back to it. Thanks for keeping my ADD in check. Yeah, well, we're challenging that 260 right now. If we crack that, we're likely down to 233. There's a little bit. This is daily. Yeah, we're on a daily. So I would say it's pretty likely we're going to get down to that 233. I would expect that we'll dig in right there. This is here's the COVID crash. So the high before the COVID crash was up here. With long-term, let's go to logarithmic and see what it looks like. Excuse me. Well, I think that's probably right there. Are y'all familiar with logarithmic charts versus brought a blank on the term. So this is the 2000 crash, right? This is what happened with the NASDAQ. So if you go from, not semi-long. So this is a static one, right? Where you can see the numbers on the right, 25, 50, 75, they're all equidistant, right? If you go to logarithmic, it scales it percentage wise. So with a long-term picture, with a long-term view, it gives a little clearer picture because it scales it on a percentage basis. So even though this drop that we've had recently is pretty significant, we're actually, yeah, that line's pretty solid. We're sitting right at that long-term trend line that's been in place since 08. Here's where it may get interesting. So the 2000 crash was the dot-com bubble, right? Oh, this is where I need to make it. They're showing the percentage and show length of bars. So we'll change that up. So is that right? Holy cow. Oh, this is the Qs. Okay, that's about right. 102 down to 17. Yeah. 132 bars. This is a weekly chart, right? So on a weekly basis, over 132 weeks, which is what, 2.5 years? 52 weeks in a year. So 153. Yeah, between about 2.5 years. The NASDAQ dropped 83%. If we duplicate that and so the housing crash obviously didn't have as dramatic effect on technology. In 69 weeks, it dropped 52%. Interesting. I haven't ever done this on the NASDAQ. Well, not on the Qs, but the NASDAQ should be similar. Maybe it's not. I don't know. So the 2008 crash was obviously pretty heavy in the housing, right? So technology didn't get hit as hard as it did back in 2000, which makes sense. You look at this bubble, this crazy run is insane. I mean, we went from $7 or $8 up to 100 in a matter of 5-6 years. Absolutely insane. Question is, what's this crash going to bring? Because we're already at the beginning part of it, and hard to say. I haven't ever looked at the Qs like this. It's interesting. but it sounds like well, I mean, when you look at the SPX, it's a whole different ballgame. But let's get back to normal here on the Qs and put a trading plan in here. This is, now you're going to see why I love this new little feature that I found. So if we expected, if it cracks this level, it's probably coming down to 233. So this, I've got 2, 3, and 4 here now. So number 2 is my stop. So if I'm going to trade this, I'm going to put a stop right above that line. So right about there, if it breaks, actually, let's do that. Yeah, that's about right. That's still good. Get on candlesticks. So if I get bearish, if it breaks below this level and I'm getting bearish, then I'm going to stop out if it breaks back above there, 262.40. Now I'm going to grab number 3 and I'm going to put my target down here, right above that line. Boom, it's green. Love it. I used to have to click the blue and then click it and change the color. It's a nightmare. So now all we do is, just realized I didn't have that up. I haven't forgot about your gold question yet. Was it Kevin? Yeah. I'll bring up NEM on gold. I mean, it looks like, which is interesting because typically gold is a hedge against inflation, right? This is a side note while I'm getting this thing back up and running. But gold's crashing with the rest of the market, which is what happened last time when the markets crashed. Commodities crash too, and gold is a commodity, right? Where are we going? There we go. I'm just trying to get the calculator here. So if you haven't had patterns in flash, this is what it looks like. You got flashcards, so you can train your eyes to see the patterns, quizzes, pattern of the week, videos. There's about 8 hours of video in here. There's the calculator, the bonuses. If you're new to this and you haven't had it, go in here and first watch the risk reward calculator, then go take the quizzes and see how you do. Those are the first 2 things I would do. Watch the risk reward and then do the quizzes, or do the quizzes. So 262.40 is the stop. The target is 234.65. So the entry point would be 255.46. So now I grab 255.46. I'm just going to get it close. 255.43. That's close enough for me. 1 click, it's done. 3 pennies I don't care about. So that's what I would be doing on the Qs. In fact, how about this? I'll show you exactly how I trade. This is a great example. Thanks, Brenda. So we've only got this one day right here with the bullish engulfing pattern where it gapped below and took off above it, right? If we zoom way in here. Otherwise, we really haven't cracked below that level. We've got what, about a 20-point range there for it to drop. What I love to do when I said that I am conservative yet aggressive. So here's what I would do. Let's say I'm planning on a full 10 contract position or 20, whatever you trade. I don't know how much you're all trading with. You know, you're all going to manage your numbers however you do. But what I will do on this is, in fact, I'm going to use this trade thing, even though this is only stock and you can only sell shares. So it does have its limitations. Obviously, you can't trade options with it. But what I would do with this, and I'm going to put this in the Weekly Whispers account. And the low of that day is, what's the low of today? Let me cancel that real quick. What is the low of today? 259.44. So I'm going to go slightly below that, even though my entry point is 255.43. What did I say it was? 259.44. Let's just call it 259. I'm going to put a sell stop at or below. What did I say? 259.43. Let's just call it 259.25. Is that right? That's about right. Close enough. I'm going to do 300 shares. The plan is to get to a full. Dang it, it's changed. I don't know why it changes that. I'm still learning some of this. I played with this in the replay, but I haven't done it like this until just a couple of days ago. So we're going to sell 300 of the Qs at or below 259.25, which is basically the low of today. And the guy told me to put it in his GTC because it will cancel it right away if you don't. So we hit submit order, and now it'll sit there. Oh, I love this too. There's a journal. So I can attach a chart image so I can save it. So it journals it all for me. That's the part I love the most. So it'll track this. So it'll go, if it hits that price, it's going to go trigger the order and it's going to put it in here. You can see I've done a bunch of them this morning and quite a few have triggered. Tesla, I'm up 1,500 on. PLD is a call or a long position, I should say. So that's down. The other ones are all up. Apple's upside down a little bit right now. So there is, where they go on the queues? Over here. Oh, it's alphabetical. So we've got a sell short at 259.25. The low of the day so far is 259.44, unless it's dropped below that so far. No, it's still above that. So that's 259.25. And then 250, let's go 257.25. So now I'm going to add to it. What did I say? 257.25. So if it drops another $2 from there, I'm going to add 3 more contracts. Right? So I'm going to sell 3 Qs at or below 257.25. And then, so we've got, if those both trigger, I've now got 6 contracts. And now we're going to put the actual order entry in, I mean, the actual spot, and we're going to make this 400 shares, 4 contracts. So sell 4 contracts to get 400 shares of the Q, stop at below 255.43, which is the stop there in that account. So we're going to, should be adding to it. That's right. I'm not going to worry too much about it. Hopefully I got them all in the right spot. And then you'll see, wait, there it is, the Qs. So I've got 3 different orders up here in the left corner. I don't know if you can all see that, but so I've got a selling short 3 at 259.25, 3 more at 257.25, and then 4 at 255.43. So that would ultimately have me in 10 full contracts. And the beauty is, if it comes down and breaks the low of today, then I'm getting in a small position. If it continues to fall, then I add to it. If it falls even more, then I'm adding to it. By the time it gets to this entry point, I'm already ahead of the game. I should be up a decent amount, right? And the beauty is, if it comes down and just triggers the 1, if it's a false break to the downside and I just short 300 and then it turns around and stops me out, it's not as big a hit, right? I'm not getting hurt as bad as if I'd have gone all 10. Or if I wait for 255 and go all 10 here, and then it turns around and goes the other way, I'm taking a pretty significant hit. Whereas if I just stick my toe in the water here, you know, I didn't dive in head first. It's not cold. I know it's not cold. I just got a little bit. That makes sense? So that's where the conservative yet aggressive goes, where you scale into the trade as it moves in your favor. If you haven't done that before, go do it. Just do it on paper and then do it for real and find out how much better you feel, how much more relaxed you are about the trade, and how much calmer you are. It will do wonders for your emotional state when it comes to trading. Okay, is that good, Brenda? I know there was something else you asked for, but let me get to Kevin's question about gold. Now, I guess the question is, I mean, I don't know if you're talking about gold overall as the commodity itself, because NEM is the big player in the gold market, right? And it's one I've been watching, and it just broke down the other day. So as far as the overall, I mean, the commodity itself, I don't really follow it and track it. Usually the stocks kind of follow along with it. So I'm assuming gold has collapsed just like a lot of other commodities have. Copper, and that's one thing a few months ago was interesting. I hadn't, even though it makes perfect sense, I hadn't really thought about it, where somebody said, well, copper, if copper is used in a lot of stuff we do, in houses, in cars, in all kinds of places. Copper was collapsing, which is indicative of what the futures trader trading that commodity think the future looks like. It's going to get worse. So a lot of commodities, steel, aluminum, all those things have collapsed, and gold's right along with them. So as far as the actual precious metal itself, I don't really follow that closely, so I can't give you a good answer on that. But we can't look at NEM and say, you know what, gold, because obviously the spot price of gold, just like oil, right? The higher the price is, the more profit they're going to make, generally speaking. So you look at this collapse on NEM from 85, which speaking of double bottoms that we were talking about earlier, there was a double bottom here, and I was in love when I caught this little tiny rally. And now you're looking at it going, oh, wait a minute, what about that one? Yeah, I missed that. I was in love here for about a week or two. And then all of a sudden I went from 60 to 80 in like a month. And I'm like, welcome to trade, right? It happens. I don't care how good you are. You're going to miss stuff like that all day long. You just have to get used to it. And it's still hard. It doesn't matter. I've been at this 22 years, and it's still hard to get used to missing those massive runs and not being there, like Oracle. I'm not going to go there because I'll just get cranky. So long-term picture on NEM, though. Monthly. Yeah, it looks like it's probably coming down about 36. And if it cracks there, it's coming down about 25 or so. So yeah, sorry, I can't. Copper, nickel, and cobalt are three of the many minerals essential to the green agenda. Yeah. Excuse me. Well, I think that that agenda might not fare too well when the economy's not faring well, which is the crazy part. If you want, if you want to do that, you have to keep everything good. When you're crashing the economy and making things worse, people can't afford anything. You can't buy a $100,000 Tesla when you're spending $15,000 more at the grocery store. So, yeah, this may be. I was watching this. There's a little triple bottom, which now that you know the double bottom, which you probably knew already, triple bottom is the same thing. You got a midpoint here. I was waiting for this thing to break north, and it didn't. It cracked down, which is the reason to wait for confirmation. For the double bottom, triple bottom, you wait for it to break the midpoint. If it doesn't break the midpoint, this is what could happen, and exactly what happened on NEM. So I'm glad I waited, because I was tempted in here to pick up just a little bit. I said, I'm going to wait on this one. But yeah, I don't know if that answered your question or not, Kevin, but so, and NEM is the leader in the gold sector. So that picture kind of gives you an idea of what gold overall, I would imagine, is doing. So what else were you on? MU, right? And Apple. All right, I'm going to get rid of all that. There's too much junk on there, and clean it up. We'll start over. Micron. You know what? Just out of curiosity, that's not a whole lot different, really. We just did the Qs. Where were you? Spent like the last half hour on the Qs. I just placed 3 trades on the Qs. Paper trades, of course, but so there's Micron. I don't know if there's anything where we're at there. Basically at 50. Yeah, there's pretty solid support there. This is weekly, so where did that? Oh my goodness, where'd that go? The trend line disappeared. That's weird. Well, that was weekly. Yeah, this is still weekly. We're pretty well below that there. That's pretty solid. I'm going to make that a large dashed. So there's definitely, you can see there's lots of congestion in here. This 4280 level is a support. But usually what I'll do is I'll annotate it like this. I'll make it, if it's a significant, if it's a solid support, I'll make it a solid line. If it's significant, but maybe not as solid, I'll make it a large dash. If it's a really minor, I'll make it a small dash. And if it doesn't deserve a small dash, it doesn't deserve to be drawn. So we're on daily. We're just kind of sitting here congested in that area. Not much with Micron. I mean, yeah, that's not really in play anymore, so I'm going to take that out. The one thing that we could have here, which we've got on quite a few stocks, is these little ascending wedges. Right? And it's not a triangle. A triangle is not a wedge, and a wedge is not a triangle. Come on. I don't know why this thing does that. Right? Wedges, the big difference between the two is that wedges, if it's a small little triangle, these are pretty parallel, which doesn't matter that much. But a wedge can trade all the way into the apex and still be a valid pattern. a triangle, once it gets past the 3/4 point, if it's a symmetrical ascending, descending, once it gets past the 3/4 point, it starts to get weaker. So that's kind of what this looks like. Is a little, it's not really a triangle. It's more of just a short-term trend sloping up against a major trend, which the bearish wedge is a continuation pattern. So this would be in the same category, I would say. IP is one that, whoops, see, there's a bearish wedge. You got a big move to the downside, and it's basically just it's a sloped triangle tilting against the prevailing trend or the prevailing move. And this is a bearish continuation pattern. So, and that's one thing that I cover in Patterns in a Flash. So, but Micron's very similar. It's not quite a triangle, but it's flat. So if it breaks this lower trend line, then we're probably off to the races to the downside. And Apple, nobody wants to see Apple, right? This is one, that's probably why I just realized I'm up. This is killing it right now. Oh, Tesla cracked big time. Holy cow. Tesla's up $3,000. That's only, oh, this is beautiful. So here's Apple. I've already got plans on Apple. And this is, usually I would not get onto a trade like this. Oh, goodness. Now I'm cranky. This is just paper. But yeah, normally with a big giant move like this, and this is what's challenging, right? You got earnings. And even though I saw it was, earnings obviously was a big move, and then it came down and we've got this. It looked beautiful. But at the same time, it was kind of sketchy. And now I'm like, okay, if it breaks that 138 level, we'll probably head south to 124. And usually when it's moved this big, this fast, I have no interest in getting into it. But in this case, with as much momentum as we have, and with the market tanking like it has so far this morning, and if it continues into the close of the day, then yeah, this is pretty likely the momentum is going to carry it down here to 124, if not lower, who knows. So did you say you still need to see the Qs? I'll bring it up real quick, Brenda. This is it's almost the same thing. I mean, Apple, there's the same thing with this. If it breaks that 260 level, then it's probably headed to 234, which if Apple cracks and Google cracks and Microsoft cracks, if they're all cracking lower, those are the big drivers of the NASDAQ, right? Those are the big names in it. That probably accounts for 20 or 30% of it. So SQ, oh, Square. Oh, interesting. Is that earnings? I'm assuming. I just noticed you put that, Karen. I'm trying to get caught up. I know there's a bunch of, make sure I missed somebody's ticker symbol. Okay, we got Apple, Micron, Qs. Oh, sorry, Trev. Should have known that. I'm not cranky at IBM, but earnings. Okay, yeah, that's normal to be expected. I'm gonna get rid of. I can tell those are old lines on there, so we'll go back. Holy cow! It's 10 o'clock already. I gotta hustle. Sorry, I'm trying to get there, Kevin. Yeah, the question becomes this. I mean, this news that we have, and the market popped up today on the unemployment, but how high will it stay? I mean, will it keep going up or not, or is it going to continue to tank? It looks like we'll probably go sideways for a little while. It looks like it's dropped a little too far, a little too fast. It's got to breathe a little. Yeah, Square. This one's, I mean, from a big picture perspective, just thinking economically, if people are not using it, a lot of small businesses are going away. Their traffic and their revenue source is going to dry up pretty quickly. It already has, obviously. They were 375. So as long as it's stuck in this range, I would stay out of it. If it cracks below this 5145, I'd be looking at the next level of 37. If it cracks above, I guess I should have left that up there. If it moves north of there, then we're looking at about 76. I don't usually trade inside the range. I wait for it to break out. That's just me. Let's do IBM real quick. Yeah, I had on Tuesday, the Fed day, I threw I don't do too many spreads, but I'm looking at this massive run. And I thought, it's not likely to go above 140. So I put a bear call spread in the 140 to 141. And I think it was at like 30 or 35 cents. I put it in for 50 cents. I'm like, well, I'll take a shot at it. If it hits 50 cents, that's a 50-50 shot, right? You either make $500, you lose $500. Like, I'll just throw it out there, see what happens. I remember looking at it one time. It was at 47 cents, 47 cents. And I'm like, just trigger. And it didn't trigger. And then Powell started speaking and it tanked. And it never came back. I didn't even get close. Like right after it started to bleed, it was at 35 cents. So I just was like, whatever. I just left it alone and let it go away. So, but as far as IBM, bigger to the picture, that actually should be right there, 133. So if it gets below that 133 level, I'm going to kill this trend line because it's dead anyway. I think a crack below 133 brings it back to 125 or so. That's the way it appears. Same problem. We may have the same thing we did back here, but I wouldn't get bearish yet until it broke that 133 level. That's just me. You can put that line in. Or, if you do spreads, if it pops back up here to 138, then yeah, I would look at doing a spread slightly above this line. If you do it with enough time and it did crack above, which I think is pretty unlikely. I mean, with the market conditions, I can't imagine this thing going and making a new high. But I can see it going sideways for a while. So and that's where I was thinking a bear call spread might be good, because I don't know if IBM is going to tank, but if it did this, chopped around like this, and I had the 140s, awesome. I mean, I probably should have been so greedy and put it down a little lower, but I didn't. And I wasn't like, whatever, I'm not going to worry about it. Schlumberger. You gotta hurry. Yeah, oil's been on a tear, obviously. And here's the part that, and this is where I get cranky with these, because this one in Halliburton, and I think it was the CVX or XON. Back here, we had this kind of a head and shoulders type of pattern, and this was the plan. I haven't moved it. And I stuck my toe in the water on a few of these things, and it went like this. I bought puts on them, right? This is another reason to do confirmation, because I do this sometimes. I will trade the head and shoulders before it breaks the neckline, but I do a small position. But this time I loaded up a little heavier than I normally would, and then it took off and ran, and I got beat up pretty bad. I knew I could, so it wasn't one of those things. If you do that, if you put yourself in a position, just know that you could get beat up. You got to know where you're at, right? So I took a little bit of a beating, and then a couple of weeks it does this, and I'm like, ugh. It's like I would have crushed it if I left alone, but would have, should have, could have, right? You don't know. So we have a pennant pattern happening right now. The question is, will it make another leg like this? Because we already have two legs. We had kind of a pennant flag pattern here. We rallied up, we went sideways for just a few days, and then boom, another bolt. And now we've got that beautiful looking pennant pattern, which they don't often create reversals. But with this kind of run, I wouldn't be too confident in a massive upside move. The odds are that it's going to roll over from here. But you never know. I mean, I've seen it continue to run. Sometimes they just keep on going. So it's a little bit crazy. All right, we're going to finish with this Tesla. Mainly because I'm looking at this now going, okay, cool. I'm only up like $4,000 today. At least right now. Who knows what happens? So this is what I did on Tesla. I did the thing that I just did with the Qs that you just watched me do, where I entered little by little. I did the same thing with Tesla, looking at this, going, okay, we're in the middle of this, and I can't remember where it was. There's a way. Let's go look at. There's today's fills. Where is it? Where'd it go? Oh, there it is. There it is. There it is. I'm still learning this, so bear with me. So here's Tesla. Here's all the fills I've had today. So 819. So sold 100 Tesla at 219.42. It's now at 205. So that's not too shabby. It sold another 100. I had another order out. So at 819, it hit 100 at 219. 20 minutes later, Tesla obviously was tanking. It triggered another 100 at 215. So it's now 1005. That's 1,000 on that. I'm up 1,400 on that. And then where's the other one? So I did 100 shares, 100 shares. And then I said, okay, if it hits that orange, the 210.83, give me another 300. So it's a full, basically 5. Would have been, if you're doing options, it'd be 5 contracts. It's 500 shares. I'm short 500 shares of Tesla right now. And it's at 205. And the volume at this point, we're about halfway through the day, and it's already at the halfway point. And that's likely to accelerate. So this thing will probably accelerate to the downside. So we'll see. If it gets to 200, I'll probably take out 100 shares, depending on, we'll see what it looks like. If the momentum continues and there's no reason to pull it, I'm going to leave it. I'd probably put a trailing stop on 100 or 200 shares, a little bit here, a little bit there, right? Put 100 shares, trailing stop, $5 back, and another one, maybe $8 on the other 200. And then there's still 3. If they stop out, then fine. Then I got 300 still sitting there. I banked some profit. Everything's golden. So that is essentially the way I trade. And it's one of those things that's just, I'm in awesome shape right now because my cost basis on Tesla is probably 215, 212, 215, somewhere in there. So it's not even 210.83 was my entry. I could have waited for that and done all 500 there. But my cost basis is up probably, like I said, it's probably 212, 215, somewhere in that range. So I've got a better cost basis than even this entry point. So even if it did back up really quickly and stop me out, it doesn't cost me as much as if I waited till this point to get in, right? So, all right. I didn't miss any, did I? If I missed your symbol, then throw it in really, really super quick because I got to shut up because Miguel's probably going to cut me off here if I don't be quiet. But this, Deb, is that the Deb that I know? Is that, I saw that name and I went, wait a minute. I hope so. If it is, hello. Seems like it's been a long time. Or have you been in here? I just didn't notice. I only know one Deb Powell and she's awesome. And I'm assuming that's you. For trading, I use TOF for trading. That's right. That's what I thought. Awesome. Good to see you. Toss, think or swim. That's what's behind me. You can see that's what's running back there on my trade machine. This though, with Omega charts, this is my end of day charting platform. This new streaming stuff and the whole trading platform thing, this I just discovered like yesterday or the day before. And I'm super excited about it because I don't like record keeping. So this will do it for me. It logs everything. So all these trades that I do, the pattern of the week, and then, well, you'll see that coming up soon, but it will just track it all for me. So it's awesome. But yeah, so I use Omega charts for my charting, for my technical analysis, TOS for my intraday and my trading. So but there's a lot of good ones out there. You know, you can use whatever you want, whatever works for you. So test them out. A lot of them have trading platforms, try them out. So, all righty. Yes, happy trading is right. So thanks for all coming and hanging out and having some fun. You have a great weekend as well. Thank you. Appreciate it. And the rain is back in Seattle. So it is a downpour and it's getting windy. So bring on the storm season. All right. Y'all take care. God bless. Bye-bye.